Hello traders, Jeremy Wagner here with the latest Elliott wave analysis update. Today we're going to talk about the equal wave pattern. So oftentimes I'll get the question, how do I know where to start my Elliott wave count, my analysis? Well, the obvious answer is you look for the swing highs and look for the swing lows on the chart, the main swing highs, main swing lows, and look for the obvious pattern. Is it 5? Is it 3? Do you see a triangle? Well, today I want to share with you one such pattern that we look for that is rooted in Elliott wave theory, and that is the equal waves pattern. So with that, we're going to start off with the idealized equal waves pattern. And so when I talk about equal waves, let's take a look at a three-wave structure here, and you'll notice how I've got two blue lines and one black line. So when we're talking about equal waves, we're talking about alternating waves. So in this case, we've got an uptrend denoted by a blue line. Black line represents our mini downtrend. And then we've got a blue line that shows a resumption of the uptrend. So when we're measuring out waves, we want to measure out the alternating waves. In this case, it would be the first leg of the uptrend. And then we want to compare it to the second leg of the uptrend. And so those are alternating waves. The black wave in the middle is nothing that is going to be concerning of us right now. So we're going to compare A and C, or 1 and 3, depending on how you want to have it labeled. And the neat thing about Elliott wave theory is that the alternating waves generally have some type of Fibonacci-based ratio length, or they're equal in length. So the length of wave C should be equal to the length of wave A. Or there could be some type of Fibonacci sequence relationship with it. So here I've mapped out the Fibonacci sequence going 1, 1, 2, 3, 5, 8, 13, 21. Now, for those that are unfamiliar with the Fibonacci sequence, all you're doing is you're adding the previous two numbers together to get the next number in the sequence. And we keep adding this up. Now, I've stopped the sequence at 610 because you'll notice that some of the ratios, as this sequence moves farther and farther out towards infinity, if I compare the two adjacent numbers in the sequence, if I take 610 divided by 377, I get a 1618. If I take two numbers away, 610 divided by 233, I get a 2618. And if I take three numbers away, I get a 423. So that's where we get some of these Fibonacci ratios from. If you take the inverse of 1618, take 1 divided by 1.618, you get 0.618. So that's where all these Fibonacci ratios come from, and so we're going to use them as a part of our analysis. Well, like I mentioned a moment ago, the alternating waves typically have some type of Fibonacci ratio relationship, or it could even be equality. So today, I want to focus in on the equality aspect of it. The reason for focusing in on the equality, where wave C equals the length of wave A, that really narrows the focus on the potential outcomes and what specifically we can look for. So when you're analyzing the market and you see an equal waves pattern, in many occasions, it's going to represent that the whole pattern is likely going to be completely retraced. So in this case, where I've got an idealized ABC, wave C equals the length of wave A, some point in time in the future, this whole pattern is likely going to be retraced and come back to the origination of wave A, which would be down here at the bottom. Now, notice that what I didn't say is that the whole pattern will be retraced. We can anticipate that the pattern will likely be retraced, but we're not saying with 100% certainty that the whole pattern will be retraced. So that's one area where traders get themselves caught between a rock and a hard place. The second thing is I don't say when the whole pattern would retrace if it does, right? It could be at some point in time in the future. It could be right away. It could be several candles, several weeks, several months down the road. So what I'm going to do now is share with you a couple of examples of what to look for when we're looking for equal waves patterns. So we're going to start off here with gold. And so I've got it mapped out real nice and block here for you so you can see the equal wave pattern. And to measure it, you can use the Fibonacci expansion tool. We're going to start down here at the low point, up here to the high point, back down to the low point. You can see my equal wave measurement comes into play around 1439, and the price of gold got up to as high as 1433. So it wasn't exact, and it never will be. We're looking more of a generalized area. And so in this case, we have an equal wave pattern where the second up leg was equal in length to this first up leg. And what this means is at some point in time in the future, prices are likely going to retrace the whole pattern. We can anticipate that retracement taking place. So that means down here near 1180. In this case, gold did sell off and eventually came down to a low 1178 and retraced the whole pattern. Now, we're not always going to be that fortunate. Prices don't always immediately reverse and head lower. Sometimes they do, and that's nice when they do. Here we're taking a look at the euro dollar. Same type of thing. Well, we've got an equal wave pattern here to the upside. So I'm going to add my Fibonacci expansion tool. And you can see this one nailed it almost perfectly around 138, which happens to be round number resistance as well. So here's our equal wave. The length of wave C equals the length of wave A. At some point in time, prices are likely going to retrace into the future. Another benefit of identifying the equal wave pattern is it can help you identify what the bigger Elliott wave structure is as well. So in this case, here we are. It took maybe about 3 months for this equal wave pattern on a daily chart to map out. And here we are almost a year later. And prices finally did completely retrace below the origination of that pattern. So probably what we've got going on here on this case for the euro dollar is this was probably wave A of a larger ABC upward correction, where wave C of this pattern was an ending diagonal. Okay, now the market's fractal. Those were some daily charts for gold and the euro dollar. Let's take a look. We've got a naked chart here of the dollar yen, 2 hours. And do you see an equal wave pattern out here? Well, there's actually 2 of them. And they're embedded inside one another. So we get a double clue, perhaps, of what's going on with this market. So let me go ahead and map this out for you. So the first one would be a bigger equal wave pattern. Okay. And so it looks something like this, where we have A, B, and then C. Okay, so notice how the second leg, wave C, came up, tagged it perfectly, drafted a nice 2-hour long wick to the upside, candlestick formation. The other thing, the other equal wave pattern that we may have out here is also as a part of this second leg. Within the C leg, notice how I have another equal wave pattern in place. So anybody who was watching this in real time may have noticed, my goodness, I've got a couple of equal wave patterns coming into play at the exact same price or near the same price, and that we're likely going to get a reaction lower. Now, remember, the equal wave pattern says that we're likely going to get a retracement back to the origination. That would mean down here below 101.60, possibly even lower down here just above the 101 handle. It doesn't tell us when, but at some point in time, that's likely going to happen. And if you remember 2013, December 2013, the dollar yen kept screaming higher. Got up to as high as 105.50 area, and then finally sold off in January back down below the 101 level. So it took over a month of 2-hour candles for that to finally come to fruition. And so with the market being fractal, we can also take a look on shorter time frames as well. Here's an Aussie dollar 3-minute chart. I've got my swing high, my swing low, and this ends up being an equal wave pattern as well. Let me go ahead and map it out for you. So that would be our A lower, B higher, followed by a C lower. Hit it perfectly. So what this suggests is that at some point in time, prices are likely going to retrace back to the origination of the pattern And sure enough, it did in short order thereafter. So this is why it's one I talk about quite a bit. It's one of my favorite patterns. We can pick up a lot of clues from it. So what I would encourage you to do is, as you're learning about Elliott wave, use the equal wave pattern as a place to start, because after all, it is a three-wave pattern. It could be the A or the B leg of a flat correction. It could be one of the legs of a triangle. It could be wave 2 or wave 4. There's some clues that we can pick up about what the bigger structure is when we find equal wave patterns. So what I would encourage you to do is take a look at some equal wave patterns yourself. Feel free to tweet them to me for feedback. I've got my Twitter handle listed here at the bottom of the chart, @JWagnerFXTrader. Thank you very much for joining me today. We'll talk to you soon.
Thank you.